Hello and welcome to this week's edition of Wealth After Work, the show designed to help you successfully in and through your retirement. I'm your host, Kristen Oakley, and joining me in the studio are two members from ASC Financial Group. We have Ralph Grosso, who is the president and founder, and Josiah Grosso, vice president and senior advisor. We've got a great show for you today. The title of today's show is The Treasure of Your Lost or Forgotten 401k, how to unlock your hidden retirement potential. And if you're looking for ways to simplify, organize, and maximize your retirement savings, you're not going to want to miss today's show. Ralph, Josiah, my favorite father-son duo. Here we are. I love it. How are you guys this week?
Doing great. How you doing, Kristen?
I'm doing well, thank you.
We're blessed. Good to be here. We got a great show.
Yes.
Looking forward to get into this lost treasure.
I know, we're going to go on a treasure hunt together.
Yeah.
I'm excited about this,
fun.
right?
Hey, if we find anything, I get to keep it, though.
There
So,
we
go.
You've already used it.
Well, it's important to note that we're going to be using the term 401k throughout this show, but really what we're talking about is any type of workplace retirement plan or old dormant account you might have left behind. For you, it could be a 403b, a TSP, a 457 plan, but we're going to use 401k just to keep it simple, but know that whatever kind of account you might have, this show applies to you. And really the inspiration for today's show has come out of that significant growth of old lost accounts floating around out there. And we've got some statistics to share with you. This is according to the fintech company Capitalize. And as of May 2023, are you guys ready for this? There are 29.2 million left behind or forgotten 401k accounts floating around out there. But wait, there's more. They hold approximately $1.65 trillion. That's trillion with a T, dollars in assets. This represents 25% of all 401k plan assets currently invested. The average American worker has 3 to 5 old dormant accounts floating around out there with an average balance in these lost 401ks of over $56,000. All right, let's let that sink in. The average American has 3 to 5 old dormant accounts floating around out there with an average balance of $56,000 in it. That's real money.
That's
real
insane.
money. Yep.
Unbelievable.
Right?
Real money.
Yes.
Yeah.
Okay, so my first question is when folks are coming in to meet with you for the first time, are you finding this to be the case?
Yeah, so interestingly enough, you would think not, but that's not the case. Many people we meet with have 401ks from prior jobs that they either forgot about or just it just wasn't foremost on their mind.
Right.
You know, there was a time when you worked for a company and retired with that company.
Oh yes,
right?
the womb to tomb employment.
There
right?
it is. And today, it's not uncommon to maybe work 3 or 4 different companies before your retirement. We had this woman come in to see us not too long ago, and she had said, you know, Ralph, I've worked for several different companies when we were talking about her 401k.
Right.
And she said, I'm not sure if I have that type of plan with the other companies I worked for. And so we were able to do a little digging for treasure.
Right.
And sure enough, we found 2 401ks valued at $170,000 that she had no idea that she had.
$170,000, that's life-changing for someone.
Life-changing, yeah.
Wow.
Obviously, she left with a big smile on her face.
I bet.
I love it when that happens.
Right?
You know, job well done.
Yes, for sure. Well, I think it's time to pause and just let our viewers know if this is you, if you're going, I'm not sure if I have an old account, or maybe you know that you do, you're not alone. Here's another stat for you. A 2020 study by Fidelity revealed that approximately 30% of people who left a job had either forgotten about or just left behind and lost track of their old 401k account. So obviously this is very common. The money doesn't just automatically follow you when you change jobs. What are the choices or the options that people do have when they leave a place of employment with that money that they've been accumulating with that workplace retirement plan?
Yeah, Kirsten, that's a great question. Very much like Dad, you had mentioned here is we are no longer working for the same company for 25, 30, 35, 40 years and then retiring from them.
Right.
We are constantly looking to improve our situation, whether it be better income, better benefits, or better location.
Sure.
And so we start moving from these jobs to jobs. And really, there's 4 things that we can do with those lost 401ks we have. We can roll that to a new 401k that you have with your current company, okay, or your new company that you're working with, but you have to check to make sure that they allow it, because not every company will allow it.
Correct.
The second thing you can do is actually roll that into an IRA. You see, the IRS allows you to roll those 401ks out as long as you have reached 59.5 or severed employment. So that gives them an option to roll that out to an IRA. The last 2 we can do, I'm going to touch base on, but I'm going to let you know, Kristen, we don't like these options.
Okay, all right.
The third thing is we could cash out that money. And that means we just take that lump sum, we bring it over, we cash it out. But that can have some concerns and problems with that, primarily in taxes. And then the fourth thing we can do is just leave it there.
Which is what a lot of people are doing, clearly.
Absolutely.
Right?
Absolutely.
Yeah.
So those are really the 4 main options that people have.
Well, and correct me if I'm wrong, but I would imagine for a lot of folks, it could be that they've chosen to leave a job, but you could have been unexpectedly laid off, and it's not going to be top of your mind when you're stressed out, you're looking for a new job, and often it could be confusing, or maybe there's misconceptions, people aren't sure what to do. So I think it's really easy to see why this is so common. But I think it's also important for folks to understand that there are consequences of these lost and forgotten accounts. So what are some of the problems with having multiple old dormant accounts floating around out there?
Yeah, so if you're okay, I'm going to take this one
Sure.
too. I don't want to talk over you or anything. But so there's some major concerns that sometimes we see that this happens. Number one that we take a look at here is that, with those 401ks that are lost out there, they may be generating higher than average fees now. You see, while you're working with a company, Kristen, they typically have an agreement they're going to lower some fees. But if you're no longer actively employed, now those fees can now increase.
Yep.
On top of which, some of the investment options that we have available back a couple of years ago were not available now, okay? Or back then that they have. And so they're underperforming.
Right, they have limited investment choices, right?
Absolutely, that limited option that they have there. The other thing that we've seen is sometimes people have an IRA beneficiary or a 401k beneficiary that they didn't even realize they had on there. In fact, I don't know if you're gonna remember this or not, Deb. Remember our client, Stella?
Yeah.
So Stella is over from the Marshalls Creek area that we've got. And she was a client of ours from about 4 years ago. And she came in, she talked, we put some stuff together for her. 2 years ago, she came in, she said, Josiah, I just got called from this company called Old Dominion, and they said I'm a beneficiary of an account. It turns out her boyfriend from 20 years ago had her as a beneficiary, never changed it. They broke up 20 years ago.
Right.
He has recently died. She received $65,000. Now, that's great news for Stella, but I just can't help but think about what his family was thinking with those accounts. And so that's some of the problems we have. And the more we move, are we updating addresses? Do my family know what that's on there?
Right.
So there are some major concerns and problems that we have. And so folks, if that's you at home and you have maybe a couple of these missing 401ks, these 401ks that you remember, oh my gosh, I did work with that company from like 15, 20 years ago. I don't know who my beneficiaries are. I don't even know how it's working. I'm going to encourage you to pick up the phone, give us a call at that number below. We're going to set up a time for you to speak with a member of the ASC Financial Group team. We'll keep track of that lost 401k, and we'll go over a host of different options that's going to be available for you.
I love it. You guys are about to do a lot more treasure hunting as a result of today's show, right?
There we go.
Josiah, Ralph, thank you so much. To our viewers at home, that number to call to claim your complimentary retirement income analysis. Again, it could be this issue we're talking about today. It could be any aspect of your retirement planning that you would like assistance with. The team of ASC Financial Group is here for you. So call the number on the bottom of your screen, 844-918-4867. Or if you'd like to connect online, if you simply take out your smartphone, you can open up that camera app, Just point, click, and scan the QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from ASC Financial Group will reach out to connect with you to schedule your complimentary retirement income analysis that way as well. Don't go anywhere. We are just getting started. We have a lot more to talk about today on the treasure, the lost treasure, right, of this forgotten or lost 401k account. Stay with us.
I started the business back in 2005 as a legacy for my family. And I'm blessed to have two of my sons working with me.
ASC Financial Group, it's a family-run firm where we are focused on income, not just growth.
Many people can't say that they're able to work with not only their father, but their mentor and their best friend.
My main objective when I meet with someone is building a relationship, building trust.
All of the advisors and the staff, we're all listeners. It's not about telling people that come through the door what concerns them. It's about listening to them and really vetting what their goals and dreams are. We want our clients to feel like family, just like we are a family within the practice.
And that's what we want to provide for our clients.
Welcome back to Wealth After Work. I'm Kristen Oakley here with both Ralph and Josiah from ASC Financial Group. And today we are discussing the treasure of your lost or forgotten 401k account. Again, for you, it could be a 403b, a 457, whatever type of workplace retirement plan you might have left behind at a previous place of employment. And as you guys so beautifully stated earlier, this is a problem. We looked at the stats. There's a lot of money floating around out there that's not accounted for. Yep. And for folks who've left that money behind, they could be in high fee accounts. They could be underperforming. That's a lot of potential and a lot that you're missing out on how your hard-earned money could be working for you. So that's why we wanted to devote this conversation to that today. Your recommendation is for folks to take these old accounts, gather them up, and to consolidate them all into one IRA. So I'm curious, what are the main advantages of doing so?
Yeah, so when we take a look at kind of managing all of that together and we're wrapping that all together into one account, the nice thing is, like I said, the IRS, they give us that ability. If we're severed from that employment, we can then roll that in. That means we can even roll in two accounts this year. We move from another job a year or two later, we can roll that account in there. What's great about that is we're able to keep track of that money a little bit more efficiently.
Yes.
The other part is why I like rolling that into an IRA as well is now you're in control of it, Kristen. That means that we have the option to choose what investments that we want to put it in and how it works for us specifically. A 401k company may not give you individualized advice, but they're able to do that. Also, when we talk about required minimum distributions, employer-sponsored plans need to have their own RMD come out, even if you have IRAs. If you consolidate all of them, you can just take all of that RMDs from one IRA account and not touch the others. But you would have to do that if you have some employer-sponsored plans.
Yes, and just I'll tack on to that. If you don't or you miss it because you have this old account out there and you're not aware, they penalize you. So on top of the tax you might owe, or you're going to owe, you're also going to be hit with that additional 25% penalty from the IRS. So you want to avoid that. That's another huge benefit to consolidating.
Yeah, and the bottom line though, it just makes things more simple for you, Kristen.
For sure.
And I don't know, I know I'm 41 right now, but I know the older I get, the more simple I like things.
Right, you and me both.
Yeah, when we sit down with clients, the idea of simplicity makes a lot more sense.
It does. And I think back to that example you shared earlier of someone who had 3 old accounts floating around out there, 100,000 here, 70,000 there. That money could be consolidated and compounding together to help someone earn even more, right?
Great point.
Yep.
Great point.
Very, very important.
Yep.
Well, how does consolidating also help someone with their income distribution in retirement?
Yeah, that's a great question, Kristen. So normally folks, when they're entering into retirement, their number one goal is income, right? They need income. And unfortunately, these employer-sponsored plans, the 401k, the TSP, 403b, those plans are designed for accumulation, growth.
Yes.
There's really no instruction manual to say, okay, now I've accumulated this money. How does that convert into income? How am I going to get predictable income month in and month out? 401k does not do that.
Right.
And so that'll be another reason why we want to take a look at making a conversion to an IRA and then setting that up so that it's going to produce income, whether that's predictable, guaranteed income, or income where you do not have to spend your principal down. We're going to maximize dividends and interest.
I'm so glad you're talking about this, because I think so many folks have maybe done a really good job of saving and they've accumulated and amassed this lump sum of wealth. But then what, right? And I think so many people are just thinking, well, I hope I have enough money. I'm not really sure, right? I hope I have enough that's going to last me through the rest of my life. But without being able to take that money and turn it into a reliable, ongoing, steady stream of income, you don't know. And I think there's such confidence that comes with being able to consolidate, know how much you have, and then develop a retirement income strategy from it.
You know what it does, Kristen? It takes the stress out of retirement. I mean, retirement can be really overwhelming in doing that. And so today, if you're nearing retirement, or even if you're in retirement and you've got these employer-sponsored plans, you may know about them, you may not. If you've got a primary care doctor and they can't treat you, what do? They refer you to a
specialist, right?
Well, Josiah and I and the team at ASC Financial, we're specialists. We only work with folks that are retired or nearing retirement. And these are the things that we want to take a look at. How can they be handled in the best possible way, even from a tax point of view, which I think we'll get into in the next segment. So I want to encourage you that if you've got some of these plans, or you're nearing retirement, you're in retirement, give us a call. We do what's called a retirement income analysis. This will give you a good framework of where you are and where you want to be. So we would love to meet with you.
Wonderful. Ralph, Josiah, thank you so much. That number to call to claim your complimentary retirement income analysis appointment is there on the bottom of your screen, 844-918-4867. Or again, you're welcome to scan that QR code and that will get you connected as well. As Ralph said, we're going to come back and talk about the tax implications. I know I've heard it, you guys have as well. One of the biggest misconceptions and one of the reasons why folks might be scared to think about consolidating is, what are the tax implications of doing so? Stay with us to find out.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Wealth After Work, where today we are talking about the lost treasure, if you will, the treasure of your lost 401k, your forgotten old workplace retirement plan that you might have left behind at a previous place of employment. We've talked about a lot of the reasons why it happens, but there's a lot of problems with having this old dormant accounts floating around out there, this money that could be working hard for someone, and it's not because it's been forgotten. But I know that one of the reasons I've heard why folks are often intimidated or hesitant, maybe is a better word, to consolidate their old accounts is they're afraid of triggering some negative tax consequences. So let's talk about that. Should they be worried about that? What are the tax implications of doing this type of rollover?
Yeah, so Kristen, when we look at these 401ks, again, 403bs, TSPs, they are a tax-deferred vehicle. They're not a tax avoidance vehicle. We just defer the tax, right? And so if you have the ability to roll over these accounts by going trustee to trustee, right? And if you do it in that fashion, there's absolutely no tax implication, no penalty. The IRS allows you to do that as many times as you want, as long as it's trustee to trustee. Now, if that isn't the case, that could trigger taxation. And here again, that's why you want to work with a specialist. You want to work with someone that handles these. Josiah and I, we do this day in and day out.
Every single day.
Meeting with folks and looking at their 401k and consolidation and enrolling them into an IRA. And again, if it's done properly, no tax, no penalty.
Yes, because the danger would be if someone inadvertently withdrew the whole thing and put it in their name before it went to another company. We don't want that.
That's a no-no.
We do not at all. Yes, for sure.
That's going to create a big surprise at tax time.
And not a fun one at all. All right. Well, this is something, as clearly you said, you do day in and day out for folks. What are the steps that you take to help someone consolidate their accounts?
Yeah, so the first thing we want to take a look is let's get a list of, what these accounts are.
Maybe all the places you've ever worked,
where
right?
the
Just
places
to make
you've
sure
worked,
you track
right?
them down.
And so every one of these accounts will have what's called a custodian, right? Our custodian is Schwab, right? Charles Schwab. But you could have Fidelity, you could have a bank, you could have an insurance company. We need to contact the custodian. If you have statements, that's extremely helpful because the statement is going to show the custodian and is going to show the amounts. But if we don't, we could still get that information simply by calling the custodian with the client or with the prospect or with that person that has that account with us.
Right.
And then what our team does is we reach out and we know, you see, it's knowing what questions to ask.
Exactly right.
And so we will get that information, find out what is the process. And, unfortunately, nothing is uniform, right? And so every company has a different policy, a different procedure. But at the end of the day, all of them can be consolidated. All of them can be transferred over into one account.
And I'm glad you brought that up. It's knowing the right questions to ask. It's knowing how to ask them because let's just point out the obvious too. These custodians, they get paid on the money they're managing. So it's not like they're very excited about some of that money leaving, right? And getting rolled over. But I love that you're able to walk your clients through that process. So what if someone doesn't have an old 401k floating around out there, but they have a current 401k with their employer? Would they still be able to take advantage of this opportunity of rolling it into an IRA?
So it's a great question, Kristen. That's really going to depend on their age. So if you remember when I told you some of the IRS rules, if we sever employment, if we lost our job, if we retired, we know we can do that. But then the next thing is if we are 59 and a half, most 401k companies will allow you to roll that money over. And here's the reasons why. I think, Dad, you mentioned this, you touched base on it here, where the 401k is designed as more of a growth accumulation vehicle.
Yes.
It is designed to retain and attract younger workers. But as we start to get closer to retirement, it's not really designed to produce income to you. Remember, we talked about how we are income specialists.
Yes.
Okay. And so when we're able to do that, that's a process called an in-service rollover. We can take that money, we can move it into a self-directed IRA, where now we are in charge of those investment choices and decisions that maybe better align your risk and your income plan we have. But by doing an in-service, it allows you to keep that 401k open so you can still contribute. If you're lucky enough to have a company that matches, you can still add it to it, and then you can roll that out later as well. So it gives a lot of different options, especially as those who are getting closer to retirement to do.
And again, you just want to make sure you're at least age 59 and a half, that key half birthday, right? Because then you aren't hit with that additional 10% early withdrawal penalty.
Exactly.
What are some other common mistakes that folks should be aware of and avoid when it comes to this conversation?
Yeah, well, we kind of already touched about it a little bit here. I want to kind of give you an example of a client of ours who unfortunately had cashed out of their account. So this was a client, his name's Peggy. She's from the Blakesley area. She was formerly living in New York. She was working at a local bank there. And her husband had worked for JP Morgan in New York. He unfortunately passed away. She wanted to move to be a little bit closer to her brother and her sister-in-law.
Okay.
And so she bought a house here. The key was she cashed out of her deceased husband's 401k to pay for the money for the house.
Right.
She didn't realize she came in to see me 6 months later. And when she told me this is what she did, I told her, I'm like, Peggy, do you realize that this is going to cause a taxable event for you? And so not only did that throw her into 2 tax brackets higher, but when she sold the New York property, she was no longer to defer the taxes on that property in the house, which is why we kind of do some of these retirement vehicles as some tax deferral options. And it's now triple compounding. You earn interest on the money you put in, the interest that money earns, and the interest that you would have paid in taxes in a different vehicle. So that's why it's essential to make sure we do this right the other way. There's one other area, and I really kind of hammer this when it comes to beneficiaries, Kristen.
Okay.
And folks, I just want to make sure if you're out there that you understand beneficiary designation is extremely important. We had a couple, George and Kathy, came in to see us after our educational workshop that we had.
Okay.
And as we were talking, I asked George who his beneficiaries were. He said, Kathy, my wife, is the beneficiary. My 2 kids are contingent. And a little bit after the meeting, or while the meeting was going on, we had to call the company to ask a couple of questions about fees and asset allocation. While I had them on the phone, Kristen, I gave them a call. I asked them, who was the beneficiaries? He said, you know what? It was the 2 kids. George was absolutely right. And Cynthia was the primary beneficiary. I did that. I'm like, well, Cynthia, Kathy's standing across from me. Who's Cynthia?
Who the heck is Cynthia, right?
Kathy got really upset and she goes, that was his first wife. Here's the thing. They got divorced 25 years ago. And I swear, if you remember this, Ralph, if looks could kill, she was going to slap him upside the face, and I was really concerned. We were able to make that change, so it's not only go to the ex-wife, it wound up going to the current wife that was supposed to. And so, folks, if that's you out there, if you're not too sure where your 401ks are, if you're not sure who your beneficiaries are, if you don't know if it's producing the right amount of money, I'm going to encourage you to pick up the phone, give us a call at the bottom of the screen there at number. Let us walk you through our proprietary retirement income analysis so that we can help you achieve the retirement of your dreams.
Josiah, Ralph, thank you so much. And thank you to our viewers. We'll see you next time here on Wealth After Work.
Thanks.